Okay, we're on. Here we go. Good morning, everyone. Before we get started, I would like to let everyone know that we're recording today's session. Welcome to our May AARP New Hampshire Coffee and Conversation Long-Term Care New Realities. My name is Alan Cohen, and I'm your host for today's conversation at AARP New Hampshire, and an AARP New Hampshire volunteer. Our guests this morning are Keith Nyan, Tiffany Fuller, and Andrew Demers from the New Hampshire Department of Insurance. Working with me today is another AARP New Hampshire volunteer, Bev Cotton. Bev is going to do the registration and will be messaging you for your name. She'll also be monitoring the chat box and raising your questions and comments throughout this program. Before we begin, I would like to cover a few housekeeping items. Please be sure to mute your line by ensuring your microphone icon has a line through it. This will help to eliminate background noise. We would love to hear from you this morning, though, so if you would like to ask a question or comment, please use the chat box, which can be accessed by clicking the chat button at the bottom of your screen. At AARP New Hampshire, we are focused on the health, financial security, and social connections critical to the well-being of those 50 plus in the Granite State. We carry out our task through targeted advocacy at the state and federal levels, compelling engagement of the 50 plus community statewide, and serving as a trusted resource for information for our members and the public. Long-term care insurance is one way that individuals can pay for nursing home care, home health care, and personal or adult daycare services. This type of insurance, introduced in the 1980s as nursing home insurance, may pay the service provider directly or provide reimbursement to the policy owner. Each plan presents its own unique pricing challenges. Keith Nyan joined the New Hampshire Department of Insurance in September of 2007 and is currently the Director of Consumer Services for the department. He's actively involved in consumer outreach and assistance programs, supports the department's legislative efforts, and frequently provides product expertise and industry perspectives to the department's executive and legal staffs. He has been involved in regulatory initiatives since 2009, when he was appointed to the National Association of Insurance Commissioners Suitability of Annuity Sales Working Group. He holds a bachelor's arts degree in Russian and an associate's degree in accounting. Also with us today from the department to help with questions and answers are Tiffany Fuller, Consumer Outreach Coordinator, and Andrew Demers, Communications Director. Welcome to Keith, to Tiffany, and to Andrew, and thank you for joining us this morning. Keith, can you tell us about the mission of the New Hampshire Insurance Department and give us an overview of the Consumer Services Department?
Oh, absolutely. Thank you very much, Alan, for inviting the department to participate today. And thank you to my colleagues, Tiffany and Andrew, and certainly on behalf of the Commissioner, Deputy Commissioner, we're very happy to present some information today. Really at the core of all of the insurance departments, at the core of its mission is to protect consumers in the state of New Hampshire relative to insurance issues. The Consumer Services Division is uniquely situated in that regard, in that we are the face, the ears, the voice of the consumer department to individual insurance consumers in the state. The Consumer Services Unit's mission is threefold, which is educate, navigate, and investigate. And that's kind of a concept that we use to educate. We frequently, kind of our bread and butter mission is we take emails, phone calls for consumers every single day. We try to educate consumers about insurance products or issues that they may be experiencing. And I know we'll talk about long-term care shortly. Navigate, we're also here to assist individuals who are having difficulty navigating the insurance industry, whether it be problems navigating a denied health claim, maybe an individual's having problem selecting health insurance, Somebody may have a problem with a homeowner's claim. So we're here to help navigate the complexities of the insurance industry. And then lastly, we have an investigative component to our mission, which is we investigate grievances relative to our licensees, which are insurance companies and agents, that if someone feels as though he or she's been harmed, we're here to investigate the issues and hopefully find some sort of remediation that will address the person's concern. So educate, navigate, and investigate. We're here to help. And in that regard, we welcome all callers, and hopefully at some point we can share our contact information before we leave today.
Sure. We're specifically talking about long-term care insurance today. So can we speak a little bit about the premiums and the potential of premium increases on an annual basis?
Absolutely. I think first of all, it's very important to understand what is happening within the long-term care environment. There are a number of different assumptions that were made into the pricing of long-term care policies. Essentially, companies, when they issued long-term care policies, made some assumptions that premiums would be paid by policyholders. There's also an assumption made that many policyholders would lapse their policy or never use those benefits. What we at the department have found, what companies have found, is that people have not lapsed their policies. People have kept their policies, which means there are essentially more people in that pool to draw against benefits, and that there's less money in that block of business to pay the outstanding claims. More policyholders are likely to file claims, and with fewer policyholders that have lapsed, there's just less money to pay those claims. So basically, rate assumptions made by the individual insurance companies early on have proven to be invalid, and now companies are coming back and raising premiums, which are impacting consumers. In New Hampshire, back in 2018, as I believe you referenced earlier, New Hampshire passed an insurance rule, which was a way for the insurance department to regulate some of these significant rate increases that consumers have been seeing and frankly will continue to see. What the rule looked like is it essentially capped premium increases to no more than 20% per year. And there was the significant part of the rule is once an individual turned age 70, the maximum increase that a consumer could see would ratchet downward until age 90 from a max of a 50% increase down to about 10% at age 90. It was a very effective mechanism with companies to control increasing costs when consumers needed their policies the most. However, in 2021, the New Hampshire Supreme Court struck down that rule or vacated the rule, which eliminated that consumer protection. What has happened since that point in time is many carriers that previously had sought large increases and were denied have now come back to the department and have requested rate increases, which by laws we just talked about, the rule had been vacated by the court. The insurance department is now in a position of having to approve. Where that leaves us is, I'm just by quick reference, since the beginning of the year, we've had a multitude of large premium increases. One of those at the highest is a 18-year increase with 20% per year, which is going to be roughly 400% increase over the life of that increase. Other companies have sought more modest rate increases, somewhere in the vicinity of 40% over 2 or 3 years. What it boils down to is individuals who have long-term care policies in the state of New Hampshire are frequently are receiving and will continue to receive premium increase notices as we go forward. Alan, I'll stop there, and I don't know if there was a question that you wanted me to address more directly, but that's the background of where we are at today.
As you indicated, the premium increases seem probably to consumers, are excessive. Are they legal?
Absolutely. The long-term care policies purchased by consumers are what they call guaranteed renewable. Companies cannot cancel those policies just on the basis of someone becoming older or having filed claims, but built into those contracts are companies have the legal right to increase those premiums to meet their costs. So yes, these increases are legal. And as we said, the rules that we had to protect consumers were vacated by the court.
And it sounds like there aren't any limits at all on what the yearly premiums could be, the increases could be.
Partially correct. A company can certainly request a significant premium increase, as I just gave in an example. However, that increase cannot be more than 20% in any given year. So that case where the company sought and had approved a rate increase of 20% for 18 years, that's 20% every year for 18 years, which the actuarial equivalent is probably going to be closer to 400%. So the only tool that we currently have, Alan, is to restrict the increase to no more than 20% per year.
What do people do who are on fixed incomes?
That's a great question. And this is what we really struggle with, which is trying to educate consumers about their options. And on that note, what I'd like to do is, with everyone's permission, is we have a couple slides prepared. I'd like to transition over to some slides the insurance department has. One of them is that we'll start off with is going to be a sample rate increase letter. And I think that's the next slide that we have here. And what we don't have is let me see if I can find it here. Didn't come up on screen. Well, I will speak to the letter. The letter is issued by one of the long-term care companies here in the state of New Hampshire. And I'm just going to read a couple of things here for you, because this is the typical language that consumers are going to receive. I'm not going to use any company names, but Company X is committed to ensuring long-term care insurance benefits will be there for policyholders. Our most recent analysis demonstrates that claims, particularly at older ages, continue to last longer than expected. Accordingly, we are going to be raising your rates. That leads into another section where we start talking about options, and we're going to dwell on this or get into this a little bit more in a minute. In this particular case, it says, based on the current benefit selections in this person's long-term care policy, current premiums are going to increase from roughly $3,700 to $5,300 per year. New premium will be effective for premiums due, at your next policy renewal. The letter. So I just want to kind of pin those two numbers in people's minds, because we're going to talk about here in a chart format momentarily. Current premium $3,700, rising to approximately $5,300. Next paragraph in this particular letter goes on to indicate that premium increases have been filed here with the state insurance department, that the state has approved them, but also makes it very clear that the premium increases have not been made by the person's insurance agent or producer, as we call them, nor the insurance department. This is not a reflection of something that the insurance department has done or the person's insurance agent. The premium rate increases are a reflection of what's going on with the financials of the insurance company. That being said, if we could transition to the next slide. This chart here actually seeks to depict some of those values that we would just talk about. And to your point, Alan, someone living on a fixed income, what are those options? I'm sorry, I'm just going to transition here. I can't see the bottom of the slide, but the bottom of the slide, I believe, let's see if I can just hide something here. As you can see here, the second row from the bottom says current annual premium, $3,717.18. New annual premium is $57,29.15. That's the $3,700 and $5,300 I just referenced. In that same column, this particular insurance policy, and all policies are built the same way and have a daily benefit, $494 in this particular policy. The benefit period lasts a lifetime. Once the person goes on claim, they can draw and have available $494 per day for care. The elimination period is 100 days. That's how many days the consumer is responsible for paying for care prior to the long-term care policy paying for those benefits. In this case, the contract has an inflation period of 3.4%. That's a built-in component so that the cost of daily care each year will go up at 3.4%, so that the person's contract is never structured in such a way that the cost of care is more than what the policy benefit might be. And then there are optional riders, none. So I want to kind of build upon those factors first. What we have realized in the state of New Hampshire is for many long-term care insureds, because of this built-in inflationary protection, which can range anywhere from, typically we see 2 to 5%, is that most insureds, or many insureds, I should say, have found that the daily benefit has actually exceeded the daily cost of care. I did a quick search this morning to double check what the current long-term care costs in the state of New Hampshire are, and they range roughly from $345 per day up to about $405, depending upon the highs and lows, and they're coming in closer to a statewide average of just under $400. So as you can see in this chart, looking in that first column, this particular person has a daily benefit of $494. So they're overinsured. What does that mean for an option for the consumer? For someone who's on a fixed option, in that first column, the consumer can accept, in this case, I think it's about a 50% rate increase, can accept a premium increase from $3,700 to $5,300, and nothing changes in that contract. What is notable here is that they're still overinsured. So what we like to talk to consumers about, and we certainly encourage consumers to speak with their agents or their producers to ask these questions or contact the insurance company, is what are those other options? In the case that I read to you from the rate increase letter, and as you see here in your chart, the second option the company is allowing in that same rate increase letter, advising consumers you have choices. The consumer can elect to keep the same daily benefit of $494. However, the benefit period would not be available for the life of the insured, but only for 4 years. And the premium, the last row of that same chart that you're looking at, the premium would go from $3,700 thereabouts to would drop to $3,585.16. So that's one option that a consumer would have on a fixed income. Again, recognizing that each individual insured's circumstances will be slightly different. And then the next column, which is reduce your DB, reduce your daily benefit. We mentioned before that the average cost of care in New Hampshire is about $345. Here, the consumer is presented with the option. You can reduce your current coverage to that current cost, $346, keep your lifetime benefit, $346 per day, and the premium does not increase. And then lastly, it's kind of a hybrid of combining a number of those different components, limiting the benefit period to 10 years. The daily benefit would decrease from $494 to $386, which is still above that daily average. And then the premiums would also drop. So individuals on a fixed income, if their premiums are increasing by a significant percentage, companies are required to offer these non-forfeiture options. The charts are not always crystal clear, or the explanations consumers receive in their benefit increase letters are not always crystal clear. So we encourage folks to reach out to their insurance agent or producer, contact the insurance company, and certainly we are available here at the insurance department to talk to consumers and help consumers understand options that they may have.
Thanks, Keith. You've given us a lot to think about.
Yeah, I apologize for going too fast, Alan, but I wanted to kind of get to that chart as a speaking point.
Sure. Bev, do we have any questions?
We sure
from the
do.
audience?
Yeah, we do. Thank you very much for being here and talking about this very, very important topic for us today. You have referred to the term care in a pretty broad way. And does the benefit cover home care, assisted living care, nursing home care? How does the benefit relate to those various types of care?
It's a very good question. It's a broad question. Most, and again, the devil's in the detail. Insurance contracts are exactly that, contracts. They're documents with legal language which stipulate what is covered and what is not covered. We always refer consumers, again, to speak to their producers, to look at their contract. That being said, most long-term care contracts do have components for at-home care or assisted living care. Typically, at-home care falls under a different threshold, a financial threshold as to what's covered and what isn't. And sometimes the elimination periods may change. But absolutely, long-term care policies are designed for some of those less institutional, at-home care type arrangements.
Are there any pre-existing conditions that are considered for people to be eligible for long-term care insurance?
Again, it's not necessarily. I think once you start layering in factors relative to, Medicaid or individuals who are on some sort of assistance, yes, there are some financial components. Typically, when we're talking about fully insured consumer purchased long-term care contracts, the pre-existing conditions, if you will, usually are talked about in the terms of an elimination period. How many days must a person pay for care prior to the contract paying those costs? And again, those can range anywhere. I shouldn't say it again. Again, in the case of the sample, the example that we gave was 100 days. Typically, elimination periods range anywhere from 30 days to 180 days.
Okay. Are there any kind of riders to the policy that change the premiums?
The riders, I guess it depends upon the kind of contract. There are different types of long-term care policies. Typically, we're not going to see riders relative to premium increases. The premium increases are usually baked into that contract. And I don't know if I'm answering your question properly, but I guess we'll go with that. Is there a specific type of rider that you're thinking of, Beverly?
Actually, it was submitted by another one of our guests, so I will ask them to, if they have any clarification to that question, to please put it in the chat.
Sure, thank you.
I have a person who is wondering if inflation rates, our current rate being around 6.6% for the very moment, probably be more by the time we're finished with this presentation. But is that factored into the premium increases at all?
The premium increases are not necessarily taking into consideration the cost of living. The premium increases that the companies determine are appropriate must be actuarially justified based upon claims experience, monies already collected in that particular block of business to pay claims, and what those expected claims are going to be. Relative to that, as the cost of long-term care is anticipated to increase, not necessarily cost of living, but anticipated cost of long-term care increase, that would certainly affect that actuarial calculation, driving those premium increases.
That makes sense.
Yeah.
Is there any legislative effort, either locally or nationally, to help to control the cost of these premiums and in the words of the submitter, to stop the insurance companies from excessive profits and burdening the policyholder.
Locally, I cannot say there's necessarily anything in the pipeline now that I'm aware of. I can tell you at a national level, we have discussions with our sister regulators from every other state. There are several national meetings per year where insurance regulators across all the states get together. And one of the topics of reoccurring interest is long-term care rate increases. The rate increases we're experiencing in New Hampshire are happening across the country. There is no one-size-fits-all solution to how insurance departments protect consumers against significant premium increases. As I mentioned, we attempted back in 2018 to put some limits on the increase, and the courts found that to be invalid. So we will continue to think of ways, try to be creative, and find ways to help consumers. I did see a quick question flash across here. I think it was in the chat. It's a great time to bring this up. We had already talked about individuals who are on a fixed income. What are the options for limiting those increases? The most significant option that we didn't discuss, and it's usually when consumers find themselves at the point of, I can no longer afford these premiums at all, whether it be at the current cost because the cost of living is going up, or because of the increases. Consumers who have received and boy, I'm going to have to talk in a lot of variables here, but just try to follow the basic concept. There's a non-forfeiture rule in the state of New Hampshire and other states, which essentially states if an individual consumer has experienced a significant rate increase, and we'll talk about that in a second, then the company must offer a paid-up policy benefit. Paid-up policy benefit essentially means the following. Consumer decides, I can't afford premiums anymore. I'm afraid that if I surrender my policy, I've paid into it for 20-something years and I have nothing to show for it. The scenario that we're talking about, basically the company will recognize all of the premiums paid by that individual long-term care consumer. And let's say over the course of 20 years, a consumer has paid $45,000 in premiums. Then the person would have a paid up long-term care contract that has a $45,000 pool of money to draw against. No more premiums need to be paid, and a consumer essentially has created a long-term care bank account to draw against for long-term care, subject to all the normal conditions in the consumer's policy, elimination periods, daily benefit values. But it's a way for the company and consumer to reach a point of, hey, we recognize your financial situation's changed. You haven't paid money into this policy for nothing all of these years. And we find in talking to consumers, that is one of the most significant discussion points that we have. Consumers don't necessarily understand this option. The variables I speak about, what constitutes a significant premium increase, is determined by a couple of variables, most notably when the person purchased the contract. I printed off a chart here earlier. I'm just going to quickly find it here on my desk. What constitutes a significant increase for someone who purchased their long-term care contract at age 29? If premiums increase over the course of the policy by 200%, that's a significant increase that would trigger this paid up contract benefit. And that changes from 200% to someone who purchased the contract at age 65, that triggers a 50% increase. Someone who's age 80, it's 20%. And someone who's age 90 or older at the time of purchase, an increase of 10% or more would trigger the paid up policy benefit. And again, these are the options that companies are required to tell consumers in the premium rate increase letters. And consumers who receive these letters should contact their insurance agents, producers, or certainly reach out to the insurance department. We're happy to help folks navigate that decision that they will need to make.
Keith,
Okay.
I've got another question that anytime anyone has a consultation with a financial planner, one of the first questions is, do you have long-term care insurance? If you don't have it, you should get it. And my recollection was the best time to buy it for an individual is around age 55, because theoretically you're in good health at that point, and the buy-in would be relatively inexpensive compared to what it would be as you age. Is there any thought legislatively with the government that there might be a subsidy for long-term care insurance, since every financial planner suggests that everyone get it?
It is to answer your question directly, I'm not aware of any sort of subsidy type discussion taking place. It does open up discussion around another type of product called long-term care partnership. A long-term care partnership policy differs from a traditional long-term care policy in that it has baked into the policy language certain stipulations that an individual who has a partnership policy can disregard many times for someone who's going on Medicaid. There is an asset spend down before somebody is financially eligible for Medicaid. The long-term care partnership program basically allows an individual to protect a portion of his or her assets relative to how much they've paid in premiums for long-term care, which starts to look a little bit like a subsidy, Alan. So I guess in short, it would be no relative to, has there been any discussion about subsidies for premiums? However, with regard to subsidies or other financial benefits of policies, a partnership policy does afford individuals opportunities to protect some of their assets before they become eligible for some federal programming.
Okay. Bev, do we have any further questions?
There's a question here from Richard, who says, does the commission work with ServiceLink? Yes, we do. We work pretty closely with that group, not necessarily in partnership, but our groups frequently do talk with one another and we share information.
Okay. Bev, you're muted.
I'm sorry, that has a membership of roughly 225,000 folks in New Hampshire. Roughly in New Hampshire, how many long-term care policies are issued to individuals? Do you have that data?
I do not have that currently. It's something that we can certainly try to find, but I do not have that off the top of my head. I'm sorry.
And I don't think we quite covered this. Our hybrid long-term care policies that are coupled with life insurance, are those generally thought of as being a good product?
I would say the products that are available to include these hybrid products, which are typically a long-term care contract attached to a life insurance policy, it's going to depend upon the individual purchaser's financial situation. Generally speaking, the way the long-term care premiums on these hybrid products are funded have to do with interest components related to those contracts. That's really a financial planner type question to see how it's going to benefit the individual consumer. They're not necessarily bad. It's just making sure consumers understand what they're buying.
Do you have either on the insurance company, New Hampshire insurance website or somewhere, do you have a listing of which insurance companies offer long-term care policies in the state of New Hampshire?
It's another good question. I do not believe we currently have just a list of all the companies currently licensed to sell or who are actively selling. There is a way to link from our website to our, I can't call it a parent organization, but our membership group, the National Association of Insurance Commissioners, which acts as kind of a de facto federal regulator for insurance. On that website, there is a search tool where consumers can go and search for the names of the companies who are licensed to sell long-term care in the state of New Hampshire. What becomes challenging at times is even though a company may be licensed to sell, the company may not actively be selling.
Okay. And Tiffany just put the website URL in the chat for folks. So thank you very much, Tiffany, for doing that. And we are recording this session, and then recording will, there may be a slight delay in when it gets posted to our website, but it will be posted to our website. And Francis asked about average cost for long-term care insurance. I think you already spoke to that, but if you wouldn't mind repeating that one piece again, please, Keith.
The numbers from the website this morning, I don't have the website citation, but these were based on 2021 metrics. So obviously we're in 22. Usually we see numbers in arrears. The cost of long-term care in New Hampshire ranged from approximately $345 to a high of about $405 in Manchester, with a statewide average of just about $395 per day.
Okay, great. And there, Tiffany put some additional resources in the chat. And just so you know that you can copy and paste those resources into a Word document or some other place for more long-term keeping if you care to do that. And I think that is all the questions I see right now in the chat. So thank you very much.
Great. Thanks, Bev. Keith, as we're starting to wind down now, I think that Tiffany has put some of the email addresses up there. Are there any telephone numbers that you possibly have that you could share with us if anyone's got any additional questions?
Absolutely. So I can't stress enough that as there are specific questions about individual policies, we really do encourage individuals to contact their agents or producers, because the company specific information that's needed to answer those questions, those individuals will have. That being said, we take great pride here at the insurance department of being able to assist consumers regardless of what the problem is. There's no wrong door. If you come to the insurance department, we will make sure you find help. The consumer services hotline number is 800-852-3416. That is a phone tree. So when you call that number, you'll be prompted to enter a couple different choices. Consumers would want to press, I think it's option 2 for life and health products. And one of several people will answer your call and try to assist you with those questions. Very proud to say we've helped a number of people over the last 6 months in particular with long-term care issues. And it's very rewarding for us, especially when there are options available to consumers that consumers didn't realize that they had. You know, paid up contract benefits are a wonderful thing for someone who thinks they're losing a benefit that they paid for 20 years. So please call us. We're here to help.
Great.
Thank you.
Yeah, thank you so much.
Thanks, Keith. Thank you very, very much. This is such an important yet complex and sometimes confusing issue. That, as I say, that we're all encouraged to have it, but sometimes the cost of keeping it, maintaining it, is somewhat prohibitive. But at any rate, so thank you to Keith and also to Tiffany and to Andrew for spending time with us today. And to all of the rest of you, thank you to our audience for today's coffee and conversation. I hope that you enjoy hearing from our guests and that the information and resources will be valuable to you. I would encourage all of you to visit AARP's website. You do not have to be a member of AARP to access it. We'll put a link in the chat, which is aarp.org, and check the AARP New Hampshire website often, which is aarp.org/nh, for more virtual programming coming soon, including live cooking demonstrations, and paint and sip events, gentle yoga, and yes, even more coffee and conversations. So to all of you, be well, take care, and thank you very much for joining us.
Nice day.